Solana is going to flip Ethereum, potentially go to $1,000, become the hub of DeFi for this bull run in the largest layer one. If you know me, I trust numbers and data, but never subjective bias. This is going to be a deep dive into the Solana token, if these claims are possible, and why it could be the highest performing layer one for the next bull cycle. So please subscribe to this channel and let's dive in. All right, to jump right into the math, we're going to do some back of the envelope calculations to figure out if this price prediction is even realistic. Ethereum had a market cap, for reference, of 560 billion at peak in November 2021. Solana is currently trading at, let's say, $100 with a market cap of 43 billion. And so what we are going to do is we are going to take our $1,000 price target and we're going to divide it by 100. Obviously, we know that is 10. And we are going to times that by the current market cap of Solana, 43 billion, and that gives us 430 billion. And now we're going to divide that by the Ethereum all-time high market cap of 560, and that means all Solana has to do is 76% of what Ethereum did last bull run. 76%. The first thing that I want to point out is with the Ethereum fundamentals itself, right? Ethereum is slow, it is expensive, and all of the fun things like airdrops, NFTs, meme coins are happening on Solana because poor people can't afford Ethereum, right? If you want to ape in $250 into a meme coin on Ethereum, you're paying $50 buy, $50 sell, 5% slippage. So you need like 50% returns just to break even. Poor people can't afford that. Solana, you're paying fractions of a penny, it's near instant finality, and there is loads more happening in the ecosystem. I understand it is incredibly hyped right now and it is flavor of the month, but people are saying it on Twitter best. They are coming to Solana for the hype and for the airdrops, and they are staying because of the user experience, plain and simple. And so not only do I think that is realistic, personally, I think it is likely. There are so many different data points supporting the idea that Solana is gaining strength against Ethereum, and I'm gonna break them down. Honestly, Solana going to $500 billion seems like light work. Remember, it is innovation, efficiency, and risk management that drives layer one's action. At the end of the day, Solana has all of the momentum and Ethereum has none of it. All right, this is going to be a heavy technical session. I'm going to break down a couple charts. Please bear with me. The first thing we're looking at, Solana USD. Obviously, we know that in September, it was trading at $20 and now it's over 100. But the charts that I really want to focus on are Solana ETH. So this is the amount of Solana in Ethereum, right? So if this chart is going up, it means Solana is gaining ground on Ethereum. Solana is becoming more valuable in ETH terms. So if this chart is going up, it means Solana, plain and simple, is outperforming ETH. The other one I want to look at, Solana BTC ratio. It is very hard for alts to gain ground against BTC, but as you can see, Solana has been making steady progress. Solana dominance, so that is Solana market cap divided by total crypto market cap. It's easy to understand, right? Solana has been very bullish. It is taking up a larger section of total market cap, and so Solana dominance has been going up. Solana TVL, obviously we are all familiar with just how hot Solana airdrops have been. There is a lot of equity flowing into the ecosystem, causing the TVL to rise because people are farming airdrops. So not only is price going up in dollars, price is going up in Ether, price is going up in Bitcoin, and total value locked is rising. Focusing on the Ethereum side of this equation, I have put Bitcoin in orange overlaid. So from 2023 until now, Bitcoin is up 157%. Over the exact same time frame, Ethereum is up 85%. That means Bitcoin has outperformed Ethereum by a very large margin. An easy way to visualize this is looking at the ETH BTC ratio. I'm going to go ahead and remove this orange line, and it is pretty clear to see that Ethereum has not been doing well in Bitcoin terms, and in fact is at multi-year lows. To me, this is a very key level, and if Ethereum were to lose this, it would probably fall down to 0.04, which signifies a 20% drawdown in the ETH BTC ratio. The ETH TVL is still incredibly high at around 81 billion. This is the 3-day chart. It is still showing steady growth as the network has seen some integration and adoption during this little mini bull run, I would say. But one of the most compelling is when you take Solana dominance divided by ETH dominance. And so this is the proportion of Solana dominance growth divided by ETH dominance growth. And basically, if this number is positive, it means it is another metric to support the idea Solana is winning against Ethereum. And remember, if you like content like this, I stream 5 days a week on TikTok. The handle is at DeFiDaddy1. There will be a link in the description. We do live analysis on request. We cover crypto news, and we are always live when the market is moving. Let's continue. We're going to get into some more technical data points here in just a sec, but Solana has flipped Ethereum in terms of monthly DEX volume, NFT sales, stable coin volume, and Google search traffic. Those are very subjective measurements, but it just goes to show you it is not just price, it is adoption and utility where Solana is flipping Ethereum. Capital markets are driven by risk management and efficiency. That's it. Solana is a great example of efficiency in action. This is DeFi Llama, a great resource for looking on chain, and this chart looks complicated, but I'm going to break it down. So the first thing I want to highlight is that these blue lines here in the middle of the screen, this is total value locked measured on this y-axis, while the green lines are the on-chain volume. So there are periods, let's say December 21st, the total value locked shown with that number 1.304 billion, but the volume was over 2.6 billion. That means volume was 2 times total value locked. So if there was only 1.3 billion in the ecosystem, the average dollar in Solana was used twice in 24 hours. I will repeat that. There was not a single dollar on Solana that wasn't used at least twice in 24 hours on December 21st. That is absolutely insane and goes to show you the efficiency that is possible on the Solana network, because it is fast and it is cheap to use and it empowers users to actually use the ecosystem. This is a metric that I am called churning. It is the ratio between volume and total value locked. So for example, when we look at Ethereum, we're going to see a total value locked of 28 billion and the volume is only 1.5 billion. Doing some handy dandy math, we're going to do 1.5 divided by 28. That is only 5% capital utilization rate for Ethereum. That is awful. People are not using it on chain for liquidity. People don't want to move it. It is too slow and it is not empowering their users to use that equity in an efficient manner. And please remember, if you like data-driven insight just like this, you got to join our Discord community. It is completely free. It is full of crypto veterans wanting to help. We have PDF resources, we have video training, we have trading bots, we have AI scripts. Everything is completely free. Our one simple ask is that you follow this channel and you show support when you can. Another fun thought experiment, completely baseless, is think about who owns Ethereum. More or less, by and large, it is owned by the community. They did their ICO, they empowered a lot of people to get rich, and it is mostly owned by the community. When you look at Solana, which is mostly venture capital backed, who do you think they're going to want to pump? Are they going to want to pump the Ethereum community owned by normies, or are they going to want to pump their own bags? Think about it. And I understand that poor people don't really drive the market. It's the people with large amounts of money and institutions, funds, etc. that can push the price, but it's poor people that drive attention. And at the end of the day, a better product will always win. Think about the BlackBerry versus the iPhone. Yeah, the BlackBerry had a lot of market share, but the iPhone brought a better product to market. You have to think about it from the technology sense. Further, there is no major deliverables coming to Ethereum in the foreseeable future that is going to reduce cost of a transaction and the throughput of the blockchain. There is no major deliverables, and Solana has a lot of momentum. I also understand that retail doesn't move markets. It's the large funds, the market makers, institutions, blah, 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 blah. But those entities follow retail. Wherever retail goes, those people are going to follow because that's where the money is, right? Crazy volatility, liquidation, blah, 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 blah. Retail capital doesn't drive markets, but retail capital is like blood in the water for rich people. You've probably seen this diagram all over the internet. It is the FTX and Alameda holdings of Solana. It caused a lot of FUD and caused Solana's price to go all the way down to $8. But a little thought experiment. Do you think they would hurt investors, creditors, debitors, etc. by taking that Solana and unloading it into a liquid order books? The answer is yes, and it is for that simple reason all of this Solana has already been sold OTC. Yes, Solana is heavily a venture-backed coin. They have had multiple venture rounds, seed, founding, Series A, validator, strategic, auctions, private sales, yada yada yada. The inflation rate is around 8.5% and will be reduced by 1% every year until it is a stable 2%. It is a reminder that tokenomics don't really matter in bull markets and they only matter in bear markets. That inflation rate is quite low. Further, you can get 6.5%, even more, somewhere at 8% if you do liquid staking, but if you do traditional staking, mid 6%. You can liquid stake your Solana for even more yield. So frankly, if you're not staking, the inflation rate matters. If you are, congratulations, you are part of the elite. One of the most important reasons why Solana has been doing so well is because of airdrops. Whether we are talking about Pyth, Jupiter, MarginFi, Marinade, Jito, the list goes on and on. These airdrops have a lot of hype and are bringing a lot of users into the ecosystem. There is quite a few airdrops that you can still qualify for, and if you follow my Twitter, you can easily find this thread. You can find it in the description, but please follow my account if you do check it out. One of the main contrarian viewpoints to Solana is that it turns off and it doesn't reward stakeholders appropriately. The last time it turned off was February 2023, and the developers have been hard at work creating a more stable version that hasn't experienced any outages despite experiencing significantly higher on-chain volume. That in itself is a very serious stress test. Regarding staking compensation for node validators, think about it this way. Broadband changed the game forever. Before, dial-up was very slow and it was very expensive, but it was profitable for these companies to set up. That was what is called an incentivized but not subsidized network. But now we have a high throughput 5G fiber optic connection, whatever. That is a subsidized network with high throughput. It is slightly incentivized but not fully incentivized. So Ethereum is dial-up. It is profitable, it has a low throughput, and it is highly incentivized, right? A deflation mechanism, staking rewards, yada yada yada. But now we have Solana. It is a subsidized network because it is not that profitable. It is very high throughput and it is very fast. Think about it from that mental prototype. It's a different way of looking at it, but I think it is a valuable way to understand this problem.